Hello everyone, my name is Priyanka Moza, Senior Growth Marketer at GEP, and I would like to welcome you all to our amazing LinkedIn Live session. With the current economy, changing demands, and decrease in commodity value across Europe, it is no surprise that we are here talking about how to cut back the investment that is used to stockpile inventory in the chemicals industry. It is, after all, a huge chunk of operational cost. Right now, from CPOs to CFOs, from supply chain to warehouse leads, everybody is wondering if this scenario will change in 2024 or remain the same. How can they strategically cut cost without risking inventory loss? We understand that, which is why in this quick 30-minute session, we will talk about the tactical ways to cut cost and drive better value while destocking inventory. And as we take this conversation forward, do remember to share your burning questions in the comment box. We will answer them towards the end of the session. So, without further ado, let's welcome our industry specialist, Virat Venkataraman, who is the consulting director at GEP and has worked closely with more than 30 Fortune 500 companies. He has amassed tremendous expertise in direct categories, vis-a-vis chemicals, agro, and packaging. He will be helping us to debunk some of the existing practices and mindsets on the intended topic. Glad to have you, Virat.
Hey Priyanka, super happy to be speaking about this topic. I think it's a burning issue across the industry, and I'm just looking forward to this conversation. Thank
Awesome.
you.
So let's start with the basic altogether, right? Why is inventory management such a huge topic of discussion, not just in Europe, but also across the globe? And why is this the crucial time to take it more seriously than before?
I think, yeah, I mean, this is a great starting question, right? So, overall, I would say inventory management in the chemicals industry, specifically this year, has been a very significant and globally discussed topic for several reasons. So, first and the most important one is around the cost control. So, several firms have not been doing well, financially due to several reasons. So, cost control is at the forefront of everyone's priorities, and having solid inventory management practices can is a low hanging fruit, right? Second
Yeah.
would be to build and maintain a robust supply chain. From the learnings of the last 2 years, what we have learned is not having the material at the right place at the right time can prove very expensive. So uh, you know maintaining a solid and a robust supply chain is the second key reason. And third, I would say being very opportunistic about the market dynamics. If something is moving in the market, not being able to take advantage of it due to poor inventory management uh, practices can prove very expensive. I would also go on to say that there are other reasons such as avoiding wastage. For example, you would not, and even a lot of safety concerns, because I would not want to store severe stockpiles of toxic chemicals for my own safety. And of course, having too much inventory on your side is going to push you back around innovation, sustainability, and environmental concerns as well. So I would say in an era which is marked by supply chain disruptions, especially since what we've seen over the last 2 3 years since COVID, it becomes imperative and becomes extremely essential for companies to manage and have solid inventory management practices. And now is a very crucial time for people to relook at what is in place. I think 2023 was a year where everybody were playing it extremely safe, because we were just getting out of the COVID era, beginning of the year, and people didn't want to be left without a material. So of course this is a globally a very important topic, but I feel this is more significant in a more regionalized way, about which we will speak soon.
Yeah, I completely agree with you. You just talked about chemical market inventory and supply. So I want to know, how is inventory in, or say for Europe, different than rest of the world?
Right. So I would say that the macroeconomic situation across across Europe, it made things worse. Right. So though this is a very important topic globally,
Mm-hmm.
the happenings and the war situation across Europe made the picture a little more gloomy
Mm-hmm.
across Europe, and um, firms in Europe panicked at the beginning of the year because 2021, 2022 had severe material shortages globally due to the supply chain disruptions, due to logistical constraints, and so on. So many companies wanted to be more safe, and they played it safe, and you can't blame them for this, right? It is but obvious that you wouldn't want to not have a material in place when you absolutely need it.
Yeah.
So this was a problem that they knew which was coming, but they decided to go with it because the industry was still a little tight. And as we entered into the year, the recessionary fears, not having the same demand as we had in the last couple of years, made things worse. So effectively, you had more than what you needed,
Yeah.
and that caused a chain of reactions across the board, which has now amplified to an extent that many firms across Europe have been trying to destock, trying to sell off their excess stock at very cheap prices, asking suppliers if they can take back their stocks and try to push it off somewhere else. So it is proving to be a little expensive. Yeah.
True, true that. I mean, yes, the Europe has seen negative growth this year, and I fear that it's going to be the same at least in the first quarter of 2024. You remember, Virat, I said in the start that a lot of CPOs, CFOs, and logistic experts and supply chain people, they are all looking for strategic ways to kind of destock inventory, right? But and we will get into those strategies towards the next part of our conversation. But before talking about it, what do you think are potential challenges in first stocking and then destocking inventory? I mean, looking at the last 2, 3 years,
Yep.
given that we want to be in the safe space, of course, and then going towards 2024.
Understood. So so maybe we speak about stocking up first, right? So I would say there are four major challenges if somebody wants to stock up. Um, First of all, and the most obvious one, is your capital is actually tied up because it's pretty expensive. A significant amount of money is actually tied up. It shoots up your overall storage costs, either at your own warehouse, or you'll have to work with a supplier for some more like a vendor managed inventory programs, which is again expensive, which carry significant costs. We have a risk of spoilage, and of course there are certain chemicals which can't be used beyond a certain point, so they have a shelf life which effectively, if it's not used, this needs to be discarded, which again is a cost for you, right? So these are four significant challenges in terms of stocking. And similarly, you also mentioned, if somebody is looking to destock, what are the key risks which
Yeah.
is involved. So if somebody wants to go super lean, again, that is as well a little risky, because if there is again a supply chain, like a disruption, or if there is a logistical issue and the supplier is not able to send you the material on time, you effectively need to shut shop. You'll not have the stocks which you need. In case there is a spike in the demand, you're not very well prepared. So these are some of the key challenges in case somebody is already stocked out, right? So to address these specific challenges, I would say a business must strike a right balance between stocking the inventory to meet the customer demand and to destock to ensure that the costs are pretty much optimized, right? So implementing advanced inventory management strategies using
Mhm.
data is the most important thing in terms of my learnings.
Right.
and very open communication with your suppliers to manage that relationship really well, because at the time of need, be it both ways, a supplier only comes to your rescue.
Right.
So yeah, I would leave it at that. Yeah.
So, I mean, the kind of outcomes that we saw in 2023, do you believe we're going to continue see the same thing in 2024, given that there's not much chance that the economy in Europe is going to rise
That's true.
drastically? I mean, we would want that, but I don't
Yeah.
see that happening in the forthcoming months. So, will the bottom line outcomes remain the same in terms of this stockpiling, inventory, and then destocking?
Yeah, I mean, some of the bottom line outcomes which we saw this year so far was, at least at the beginning of the year, there was a trend of all the companies stocking up, which
Yeah.
was, and that's also quite evident in the supply chain, volatility index, which we publish. And as we move into the year, we started seeing the stockpiling situation get worse by the mid-year. And a common trend that I've been seeing now with a lot in the industry is people are trying to destock as much as they can, because we are towards the year end. The demands have dropped, and effectively getting rid of excess stock which you don't need has become a priority. Either try to prioritize and consume it for the maybe the next quarter might be a push, but there is a significant trend across the industry to destock right now and to close the books in a very positive way for the year. Now, going back to my previous point, uh, in terms of how the year started, companies stocked up significantly because of what we learned and what we also witnessed over the last 2 years. But I expect 2024 overall to be, from a macroeconomic standpoint, it's going to be the same, at least for the next 2 quarters. I don't expect any significant changes from a demand standpoint. It's going to be pretty flat. But many of the companies have learned the hard way in terms of managing inventories, and there will be significant changes in the way they actually manage inventory. So during COVID, the supply chains were shortened significantly. I expect people taking the risk again and trying to be a little more, creative with their sources of supply, and being a little more risk absorbent as against, what we witnessed over the last couple of years.
Right. Well, we talked about the potential problems. We talked about some bottom line outcomes. Now that leads to our next segment. In your amazing blog, you briefly discussed 4 ways to destock inventory and cut cost while retaining the value to business. Please detail it out for our audience.
Absolutely, would be happy to. I think this was a blog that was, you know, published a few months back, right? So, I would say going back to the drawing board and getting the basics right is quite important for starters. I think we are in the middle of a chaos which we don't like, but it's not hard to solve, right? So, first of all, doing a quick, reassessment of the time across the board in terms of uh, managing and stocking up inventories only if it is needed, right? For example, if you are single source for a specific material and you think it might be a big risk if you're stocked out and the lead time of that material from supplier to your plant is high, in that case, that's a key area which you have to assess, and you'll have to ensure that you are stocked up. Second, I would say, is to collaborate strongly with suppliers and customers. So trying to close the loop at both ends. The third and my favorite one is the just in case versus just in time. We always talk about going lean, which might as well backfire at times. So I would say having an optimal mix of what portion of your actual portfolio has to be under just in case, which is like playing it safe, and the ones that you could take a chance and say that I'm going to go lean. I know what I want to order and when, and I'm sure that the market outside is going to support my needs. So doing that assessment and rubber stamping that on your portfolio. And finally, the most important one is to, and this is where many of the firms don't do it, is to have a detailed inventory audit, which is going to give you a clear picture of as to where you stand, what are the things that you haven't been doing well, anything that you need to take a corrective action, towards.
Awesome. Well, I like the point you made, like just in time versus just in case. So if I were ahead looking at the supply chain or procurement or even cost management, I would definitely consider that as a factor while destocking or restocking my inventory. So that's amazing for sure. Well, there's a last point that you raised, and that begs me to the next question. With the new supply chain regulations that are bubbling up across Europe, Virat, will they have any effect on destocking inventory? I mean, apart from the macroeconomics that is going to remain as is, or are there any particular kind of chemicals that will take a direct hit? How it's going to be?
No, no, absolutely. I think this is the most spoken about the topic across Europe, right? So overall, yes, it will have an impact across the inventory management and the way a company actually manages their supply chain. So this effectively, right? For example, if I talk about the German Supply Chain Act, this act, it requires large companies with I think over 3,000 employees in their base to ensure a little more responsibility in their supply chains, right? Now, the act requires firms to do a due diligence in their supply chain to ensure social responsibility, and this in an indirect way impacts the way their entire supply chain works. So of course inventory management will be impacted, and because you have to ensure that you work with the right set of suppliers. Some of them offer vendor management inventories to you, some of them don't. You'll have to reassess the entire board, right? So
Yeah.
the short answer is it will have an impact, not a direct impact. It's not a one is to one sort of an impact, but it will have an impact. In terms of the specific chemicals which will be impacted, that's very hard to say right now, but I would say any of the chemical which is being sourced more globally, which has a longer supply chain where you don't have the visibility as to what's going on from the first step until it actually reaches you, will be impacted. So it
Okay.
could be a commodity where somebody is actually globally sourcing it for maybe a better rates,
Mm-hmm.
or it could be something which is palm based, which is coming in from the east, which you have no idea what is happening. There could be a child labor issue that is impacting you in that part of the world, and so on, right? So it's very hard to shortlist very specific chemical names, but any chemical which has a longer supply chain where the visibility is not very clear to you is, they will be impacted for sure.
Yeah. And these insights, and I know you made some recommendations just in the previous question, are they for businesses across just Europe, or that also includes UK? I mean, let's not keep UK
It
outside.
includes everybody. It includes everybody. The inventory management practices though stays the same across the board. I would go on to say it includes everybody, even globally.
Okay. Well, last but not the least, before we take our questions from the listeners, as the chemical industry is closely associated with the impact on the environment, where does and rather how does GEP come into picture in terms of solving the problem? Are we really ready as an organization to solve that problem in that industry?
Absolutely. No, no. I think this is a key and a burning topic where GEP has already helped several clients across the industries, be it chemicals, pharma, CPG, where we run specific inventory optimization programs. So effective inventory management is all about knowing as to what you have, when do you actually need it, what is stocked, and how much do you need, and when, right? I know it's easier said than done, but that's where GP brings the value. We use a multifaceted approach towards inventory management overall globally, and in this very volatile and an interconnected business, having solid inventory management techniques is going to be super important for people to improve and expand on their existing supply chain efficiency. So with more than a decade of experience in this side of things. We have helped several clients across the industries to optimize their inventory levels and run inventory management programs. These are very short-term engagements that we have had where we just come in, give the advice in terms of things that you need to be working on, which is extremely effective. Super happy to have a chat with anybody who would love to have a quick assessment done. But yeah, that's
Okay.
what I
I'm
would say.
sure a lot of people listening to us would be interested in the ESG side of the house. Well, great energy so far. We still have so much to talk about, but this is the time for audience questions. So I'm gonna just take through some questions and let's see how we go. So the first question in line from our audience is, and I think we have partly talked about it already. What might be some advanced strategies to manage inventories better?
Okay, I think yeah, as you said, we spoke about this in bits and pieces. So let me summarize this maybe in the next couple of minutes, and I might I'll try to keep it simple, right? So first, and the most important thing is, and this is where most of the companies falter, is around demand forecasting, and this has to be backed by actual data, right, as to what you need, what has been the historical trend. So demand forecasting driven by solid data analysis, very strong supplier relationship programs where you have a very open communication channel,
Mhm.
just in case versus a just in time assessment across the board, which also includes a detailed lead time assessment, using data to understand historical inventory movements across the board to ensure what is a good safety stock versus economic order quantity,
Mhm.
exploring supplier inventory programs where they manage inventories on your behalf, which is on the contract, where you effectively can be assured that a supplier is going to manage inventory for you. You know what your lead time is, and effectively you can reorder your stock exactly when you think that you need it in line with the lead time. And and this has to be ensured because you don't want to be stocking up more. And uh, data analysis is going to solve a lot of this topics. So even implementing a few of these in a very structured way is going to take you a long way in terms of solving the inventory topics that you have at hand.
I completely agree with you, Virat. I mean, data is, after all, the key, whether we are talking about AI, ESG, or any kind of implementation. Unless the companies audit their stocks or whatever they do the forecasting properly, they won't be able to
Totally.
manage
Yep.
cost and create value out of it, which is the key term here.
Yep.
Well, next question, right? Next question is, how does a best-in-class inventory management look in real time? Okay, this is a tough question.
Okay. So I can maybe you know I can give you an example basis my work with a client in the past and what I have seen, right? And I believe that's something that they have gotten it super right, bang on target. So for me, in the chemicals industry, real-time inventory management is very important to ensure availability of the raw materials, adherence to safety regulations, continuous production. And for instance, say a company employs a real-time inventory management system which seamlessly integrates with their entire production line and their entire supply chain, right? So this is what I think is best in class. Every chemical container at the site has an RFID tag on it, which provides a real-time data on its content, on its quantity, on its location, expiration date, and so on and so forth. And these RFID tags are then actually read by sensors installed at various points in in your line. And what happens is when your stocks go down beyond a certain point, this allows you for a continuous monitoring. So when a chemical quantity approaches a predefined order point, the system automatically triggers a reorder request to a supplier, and your supplier of course should have been informed about what the quantities which you need, which goes back to our previous points which we spoke, right? So though the system automatically triggers a purchase order to the supplier to restock, if a supplier has not been already informed about as to what you need for the entire year, it's not going to work out in your favor, right? So this is the infrastructure which I believe is going to be very important to ensure you have the raw materials which you need on time. And furthermore, I've also seen firms implement a systems dashboard which provides the companies with real-time inventory visibility in terms of as to where they stand, to avoid very expensive overstocking situation, and which ensures that they strike a balance between going lean and also being safe. And all of this while, of course, managing the complexities of the market demands in a very volatile and a competitive industry out there.
Right. Okay. We have another question. Wait, we have a lot of questions actually. Um, I'll take Monish's question. Monish asks that how can procurement teams in chemical companies collaborate with other departments such as production and sales to ensure a successful inventory destocking initiative? Loaded question.
I think it's a very simple question, very interesting one as well, because for me it's a straightforward exercise, and again easier said than done. Open communication, right? If a
Yeah.
production and say sales need to be talking more often, and all of this is enabled by procurement. So unless all three parties on the table exchange information in a very open way, I know there are certain market limitations, there are certain business requirements, a sudden spike in the demand which the business needs, and that's exactly where historically you need to check how significant has these things been for you to be slightly prepared. And in case there is a need, which supplier could you actually rely on for you to stock up, right? So open communication and exchange of information at a periodic and a regular time frame is
Right.
will be key.
Mhm.
And I think getting that in place is going to be imperative to having a solid relationship between all the three departments.
Right. So basically, usually we work in silos, and this time around, if we want to cut cost and drive a better value, we have to
Absolutely.
kind of break down those silos, right? That's what you
Yep.
mean.
Yep.
Okay.
Absolutely.
Next question, and we are right on time, so maybe we just quickly answer this. Tirupati Reddy asks, a majority of chemical, and this is by the way outside of Europe, but maybe we just take it
Yep.
out for fun. Uh, Majority of chemical companies based out of India have had faced destocking issues. These have higher exports, majority revenues from US. When do you think the situation will ease? So they're talking about APAC and US comparatively.
Okay, so when this situation would ease, I would say not until the next 2 quarters. I know there's a lot of emphasis now on people trying to destock, and the supply situation for at least a majority of the chunk of the chemicals is still good out in the market. Of course, barring some regional trends. So I would say not until end of Q1 of the next year things will start getting better. But until then, I expect the markets to be or the destocking issues to just continue as it is. Of course, with significant learnings from this year, there would be a lot of firms implementing advanced inventory management practices, but I don't expect things to improve drastically overnight. It's going to take another 6 months for industry to get back to normal, and I would go on to say at least a year to reach the pre-COVID levels.
Wow. Well, this has been a very eye opening discussion, and we have a lot more questions, but we are already on time. So I would just say a lot of takeaways for everybody. For me, two things definitely stood out. First, I think doing audits at a shorter interval of time instead of the traditional longer frequencies. And second, the setting of the safety stock level that you just briefly touched upon, Virat. I think these are the two ways companies can definitely manage their cost while moving away from the excessive stockpiling trends that we usually do.
Absolutely. Yeah. And I think you summed it up really well. Getting the basics in place should be the priority. and pushing off from there will take place on its own, right? So yeah, absolutely.
Awesome. Well, thank you, Virat, for sharing your experience with us.
Super happy to. Thank you.
Well, before everybody signs off, I just want to give a quick reminder that we will be back on 21st of November with yet another insightful session on the BFSI sector. For more details, visit our events page on LinkedIn. Till then, take care, everybody.
Bye everyone. Thank you.